My name is Shobit, and welcome to my YouTube channel on value investing, where I'll share the valuation of businesses and will review the annual report briefly as well. A little about this channel and why it's created. As a security analyst and long-term value investor, I read a lot of annual reports, which are called 10Ks. I analyze business, perform the DCF analysis, and find investment opportunities. My principles are inspired from Ben Graham, Warren Buffett, and Charlie Munger, which are buy great businesses within circle of competence at fair prices and hold them forever. Unless obviously anything changes, like if the management is not aligned with the business goals or if there is a macro change which might affect companies' revenue in a big way. So our favorite hold time, if no better opportunity comes, is forever, as it's a great opportunity to be invested in a great business at the right price, if not overpaid in the first place, of course. So this channel was created when we have been doing this value investing since June of 2019, and it resulted in the returns of 13.33% average annually as of July 2022. So the total returns were 40% in the last 3 years. These returns were obviously like boosted by the COVID buying opportunities, right? There was a dip during COVID, but it was also offset with the recent bear market, basically just summer 2022 and post summer 2022. So these returns were actually 70% if we exclude the recent stock market crash. And also these returns doesn't include dividends earned, which were averaged to be 2.5% across the full portfolio, which were mostly reinvested in the portfolio for quarterly compounding. So without further ado, let's dive into the Meta's DCF valuation and 10K review. So I have been, monitoring Meta, and I have read 2019, 2020, 2021 10K of for Meta in the last 3 years. And yeah, I mean, we all know that Meta is the largest social network in the world, right? With nearly 3 billion monthly active users. So here I'm showing you so in the DCF analysis, discounted cash flow analysis, what I'm trying to show here is like there are some projections, obviously. There is a revenue growth, there is operating margin in the base year and year 2 to 5, year 6 to 10. And then I'm showing here how much those projections, um, show the value of free cash flow. So basically the revenues will be projected based on these assumptions, and then we'll compute the earnings from that based on our operating margin, right? And then we'll compute the reinvestment based on the current reinvestment value that Meta is operating on, and then when we subtract the reinvestment from the earnings, right, after reducing the tax, we get the free cash flow. And these free cash flows of the next 10 years, along with the stable phase terminal year free cash flow, when we project these for the present year, that is this year, then we get the present value, which is shown here, right? And also the present value of the terminal year, right, is shown here. And when we add these two, we get a value of operating asset to be $246 billion. And when we subtract a debt of $33 billion, add $41 billion cash at hand and short-term investments, we get a value of equity being $241 billion. With number of shares of Meta outstanding as 2.6 billion, including the RSUs, value per share came out to be $91 per stock. So considering this $91, you might be wondering what are the assumptions that I have taken. So first of all, I'm considering that because the revenue consists of, ad revenue and also the Reality Labs, which is the hardware business side of Meta, and it's incurring a lot of loss. So I've considered a negative 1%, revenue growth in this year, and then in year 2 to 5, I'm considering this percentage to reach a nominal value of 3%, then which then converges to the risk-free rate at the year 10. So here you can say that why a negative 1%. So recently we have been seeing already like Apple's app tracking privacy policies have changed, and which has led to reduction in targeted ad revenue. And so we have already seen the slowdown, and we are expecting even further reduction in revenues. So by 2023, we are expecting, sorry, by 2024, we are expecting the revenues to start a little bit growing at a 3% nominal rate, which is not even, away from reality, considering the inflationary growth being 2.5 to 3% already. Yeah, so operating margin here we have seen in the past, because of the internet sector that Facebook is operating in, right? We have seen for 30 to 40% operating margin. So we expect a reduction due to metaverse investments, and 15% margin in stable phase is also very conservative. Current tax rate is 18%, and by year 10 it should reach a US marginal tax rate for businesses, which is 27%. So here you can see that based on this revenue growth percentages, I've got this revenues lined up here with operating margin, the earnings before interest and tax, right? And when we remove the taxes paid, we get um, these earnings number. And then if we remove the reinvestments, projected reinvestments, then we get the free cash flow. And as I mentioned, that all these numbers sum up to a valuation of $92 around per share. At the time of recording, the stock was trading at $96, and we have opened new position in Meta. We have been waiting, like when it was $300, I was analyzing the stock. At that time, when I analyzed the stock, my valuation came out to be around $105. So I knew that, it's much farther away from reality, right? Obviously, at that time, we did not know that, Apple's app tracking policy will change suddenly, and the targeted ad revenue will get hit so drastically, but still the valuation was coming out to be 105 at that time, and with the new conservative updates in these numbers, we can see the valuation. So yeah, historically the Meta's valuation has dropped from $300 around, I think, now to $96. I mean, it fell to $88, and we started buying it at $90 pricing. So we opened some position, a small position and we have been buying from $90 to $96. So why buying it, above $91? A person might ask. So my uh, so my theory is like, these numbers are very conservative, right? Even if Metaverse does show average performance, and even if the ad revenue is not showing any further growth, right, which is little far from reality. So considering these average numbers, I'm thinking that at least Meta is, worth $92 per share. So, so if anything goes north of it, then sure, we we might, get something out of this investment. I won't call it as strictly value investment, but it has, I would call, um, like as Benjamin Graham says, right, that in our, let's say if our purchase price is $96, which is the current trading um, market value of Meta, then in that $91 is the actual value of the share, and $4 I'm paying, $4 to $5 is the speculation in it. Let's say if I purchase it at 96, ideally I would like to put in some probability of failure here. So in this $92 evaluation, there is 10% probability of failure, wherein it will liquidate its assets, and a common stockholder will get their fair chunk. So based on that, also, so there is a lot of conservative uh, projections going around here. So yeah, $92 is not a very high target to achieve. Um, yeah, some recently in the past there has been roadblocks, as I mentioned, which is like, let's say, Apple privacy policy change, its upcoming AR VR headset, Google being the top competitor in ad revenue, YouTube revenues, ad revenues have been also amazing, and also the regulatory concerns, right? Because um, yeah, so like Meta actually used to at least sell the users' data across country. It tracks the users' data on the third-party apps, and then used to give you targeted ads. So that has been reduced a lot. And in the past, Meta's CFO has been making very bad decisions, like repurchasing, Meta's stock at $320 plus. In the end of 2021 year, he did that when ad revenues were slowing down due to regulatory concerns. And now they are in 2022, they are trying to sell bonds when interest rates have spiked up um, a lot, right? So yeah, that's about the valuation, the stories attached to the numbers, right? And now we can dive into the 10K. So the table of contents is right here. So in any 10K, you can, it's mostly there is business section, there is risk factors that one should review, right? There is financial statements and supplementary data. Along with this financial statement, there are always footnotes attached to it. And then one can review the other stuff like, like disclosures, and there are some auditors' remarks also in the end generally. And there are some legal proceedings that I've been going through and all in the end of the 10K, followed by a 10K summary. So let's go into the business section. So like I mentioned, there is family of apps and reality labs, right? The family of apps is the ad revenue that we were talking about, and the reality labs is the hardware side of the business, right? Which is focused on the Quest headset and metaverse. So again, the competitors being Alphabet, right, Google ad revenue and YouTube ad revenue, Amazon, Apple, TikTok, Microsoft, Twitter, right? Attention, and then basically, yeah. So there are a lot of competitors in this space, and here they have just outlined, um, what are the regulatory concerns and stuff like that. So nothing much to see here. One should also review the risk related to a product offering that they cover, right? So the management risks have been highlighted here. So main reliance is on the advertisers and marketers, ready to spend that money as shown here. And here, yeah, so I think till page 30, that's pretty much about it. Let's go to page 32. Yeah, they're just talking about their acquisition that they did way back. So now here there is some mention about the repurchase of the shares. So 320 plus was the price paid, to repurchase its share, which is pretty high pricing. And yeah, and they purchased 44 billion Class A shares. So here income statement, you can see $39 billion net income, which is 33% margin, profit margin, which is pretty decent. And so here you can see the 45 million shares were issued um, as RSUs. So these tech companies, as we all know, right, they are very big on paying RSUs, and obviously that's not that great a news for the shareholders because it creates a lot of dilution, right? And to counteract those dilutions, sometimes companies also end up, repurchasing its shares. So repurchasing is always not that great if the repurchase price is not low. So here we can, yeah, here we can see, repurchase of shares has been happened like at $44 billion has been spent. So actually these RSUs were offered at an average price of $300, um, and then they repurchased their shares at 320 plus price range. So they basically sold their shares, right? They encountered dilution, right, by offering RSUs at $300 price range, and they repurchased the shares. In fact, 136 million shares were repurchased at 320 plus price range. So it's like sell low, buy high strategy, right? Which is not how you create a value for shareholder. To 90, to page 90, there is nothing much. Let's go to page 94. Here they are just showing the user base, I think. Yeah, so here from the Asia Pacific and from Europe, US, what's the revenue classification? Yeah, then this here they talk more about the RSUs, the pricing and all. Yeah, here you can see the Reality Labs, uh, you know, uh, incurring a $10 billion loss last year, which is a lot, I think. So yeah, that's pretty much about it. So yeah, let's going back to the valuation. Yeah, as I said, $92 is like a very conservative valuation. Yeah, and our policy has been to buy rather great businesses at fair prices. So yeah, I would not mind, paying a premium over this $92. So I think we're gonna keep adding to Meta's position, like up till $100 or something, or maybe $102. So like a 10% premium. Um, yeah. So that's pretty much it. I hope you guys have a great day. Thank you.